Okay. 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 I just would like to know, can anyone unmute and tell me whether they can see the screen now? Please, I can't switch between tabs. Can you see the screen?
Yes, we can.
Yeah, we can see your screen.
Mutual fund
Thank
session.
you.
Yeah. Thank you so much, guys. Can you hear my voice? Is it audible? Sufficient? Anyone, please?
Yeah, we can hear you.
Yeah.
Yes,
Okay. Fine.
audible.
Yeah. Thank you. Okay, guys, shall we start? So, can I just get a heads up, please? Can we start? Hello. Can we start?
Yes, we can.
All of you should tell me. All of you unmute your mic and tell me, can I start?
Yes.
Okay, fine. That's fair. Yes. Okay, thank you so much, guys. Appreciate it. So, before we go into the session, since it's been a long time, I think 2.5 to 3 weeks since we had our last mutual fund session, can anyone just give me a recap as to what we did in the last session? Anyone, please unmute your mic. I want the ones who, usually don't talk. Please, anyone can just unmute and tell me what did we cover in the last session. Yeah.
We were talking about the AMCs
Okay.
and how they manage these mutual funds, and we're also talking about the categories. I mean, what kind of liquid, whether it's an equity from mutual fund or a debt one. We're talking about all these, and a mixed one also.
Okay.
We're talking about all these three.
Okay, that's great. Next, anything else? Anyone else or anything else, guys?
We also looked at the different types of mutual funds,
Okay.
equity, debt, and hybrid.
Okay, that's great. That's great. Yeah. Anything else? I did also teach something like the 4 factors which are important with respect to mutual funds. Can anyone just answer that?
Liquidity and volatility, maybe.
Yeah, that's great. Yeah, those were you did mention 2 of the 4 factors which I told. Can anyone?
Expense ratio.
Ex-
Expense ratio is one of the things.
expense ratio. Yes, we will be covering
Risk.
yes, risk. Correct.
Risk and
Return.
return.
Risk, return, volatility, liquidity. So these 4, the difference between a mutual fund and a stock marketing investing, which we will be doing, which we do on our own, there are 4 factors which usually come into all types of investments, and we did discuss those 4 factors in detail. Okay. So I hope last session, I think last session was like the most important, because without the basics of what are the different types of mutual fund or what a mutual fund does, I don't think like today's session will be valuable. I'm not going to say that, because today anyway, when I'm teaching a few concepts, I might have to recap whatever I did in the last session. So yeah, let's get started. Okay, so remember in the last session I was talking about mutual funds. You're basically, what you're doing is all the investors pool in money into a fund house, and that fund house invests on our behalf in whatever financial instrument is available. So equity mutual funds, they invest in the stock market. Debt mutual funds, they invest in debt instruments. So debt instruments, like as I said before, like commercial papers, debentures, government bonds and stuff, all those I will be covering. So we have something called fundamental analysis, which I will be taking in this club. Okay. So when the section of income tax and taxation comes, I'm going to be explaining all those. For now, you don't have to worry about them. Just remember, those are debt instruments. So what they do is, so the difference between a debt instrument mutual fund and an equity mutual fund is, debt instruments have they have very low risk and your returns are more or less guaranteed. So you just remember it something like that. And you have a hybrid mutual fund as well, which is a mixture of both equity and debt mutual funds in your portfolio. And there are a lot of other different bifurcations as well. So you have something called index funds, where your investment is put into solely in only the indexes of India. So that is the Sensex and the Nifty 50. So you have those. You have growth funds. You have I was just reading up. I was in touch with one of my intern bosses. Now they have something called goal oriented funds as well. So I was those are something like, say for example, you want to send, not you, like if parents want to send their children abroad, so instead of they want to save up some money for that. So to save that money to send their children abroad for education, they have specific mutual funds to fulfill those goals as well. So you do have a lot of bifurcations, but yeah, the 3 basic common ones are equity, debt, and hybrid mutual funds. Okay, so today I think I'll start off with something called, I think this is very important when it comes to mutual funds, taxation on mutual funds. Okay, can you guys see the screen? Yes or no, please?
Yes, we can.
Okay, thank you very much. Okay, so obviously when you're I think taxation does apply to stock market when you're investing on your own, but I personally feel that taxation on mutual funds is something you should know, because you don't want to get too complacent on your returns in mutual funds. Okay, so you should know that however the returns, there will be some taxation levied based on I'll be coming to that in 5 minutes. So there'll be tax levied based on the type of when you withdraw your money and stuff. Okay, so whether you invest in equity, MFs means mutual funds, hybrid, debt, anything, hybrid mutual funds, they're always treated like capital gain. So I think if you guys have your notes nearby, or your note taking app, I would like you guys to note this down. So equity mutual funds, hybrid mutual funds, they're almost treated like capital gain on stocks. So what is a capital gain, you guys might ask? So it's in simple words. So I'm not going to give you like the Wikipedia definition or something. In simple words, whatever profits you have secured in your mutual fund investments, you have to pay taxes on them. So that the tax which you pay specifically on the returns you get on your returns or profits, both of them are the same, on your mutual fund, you have to pay taxes on them. Okay, so for example, if we'll take something called equity mutual fund itself. So in equity mutual funds, when you sell, so I will be coming to like the numbers as well. So before that, I just want to touch upon taxation. Once I teach all this, you'll get, when I'm teaching the other things later, this part will be more understood. Okay. So for example, you buy, so as I mentioned in last class before, when you're directly buying mutual fund from a AMC, asset under management, or asset managed company, you buy units, like how you buy number of stocks. Like for example, you buy 5 stocks of Infosys, right? Similarly, you buy something called, like say the mutual fund house name is SBI Direct Plan, SBI Blue Chip Direct Plan. That's one mutual fund. Okay. So what does, so I think it's self-explanatory. So SBI is like the government asset under management. Blue chip means that mutual fund particularly invest in blue chip companies. Blue chip companies are nothing but the top top 50 or top 100 companies which are listed, very good performing companies, very good fundamentals. So Reliance, Infosys and stuff. So those are blue chip. I'll be touching upon direct plan and regular plan later. Just remember, direct plan is nothing but you won't have a broker in between, and you won't have those extra commission charges to be paid. So whatever is paid will only be the expense ratio which that asset management and the company covers. I'll be teaching expense ratio today itself. You guys don't have to worry about it. So for example, if these equity mutual funds, okay, so you suppose you buy 5 units of those equity mutual funds. I'll be teaching for how much you buy it and stuff. For now, just remember, you just think you buy 5 units at 1 rupee. Okay, so you have invested rupees 5 in that mutual fund. Okay, so for example, if those mutual funds you sell it after a year. Okay, so you have something called long term CG tax. CG is nothing but capital gain tax. What I was written here, I just wrote short form, long term capital gain tax. Okay, and this long term capital gain tax is levied when you sell your equity mutual fund units after a year, and if it's within a year, so that's within 12 months. Within a year, it's self-explanatory. It's called short term CG tax. Okay, and the figures as per the government. Short term capital gain tax, so short term, so I'm writing short term as ST. CGT is capital gain tax, is 15% of your returns. Okay, for example, say your returns or your profit, returns and profit are they're the same here. Suppose your returns or profit is say rupees 100, that means 15% of it, so 15 rupees you have to pay to the you have to pay 15 rupees as tax. Okay, so this is short term capital gain tax. So when you sell your mutual fund units within a year, this will be the taxation which will be levied on your gains or your profits or your returns within a year, when you sell your units within a year. So the long term capital gain tax which is levied is, so for long term it's 10%. Okay, so same, so for example, so long term means above a year, about 12 months, when you sell your units, the profit which you gain on a particular mutual fund, so on those returns, 10 rupees is you have to give as tax to the government. Okay, and there is a special rule here that say your profits, if your profit after 1 year, so after 1 year when you sell your units, the profit on that is under 1 lakh, it's tax free. Like say for example, so the initial value of your investment was 50,000, and after a year it is 80,000, so you have 30,000 30,000 profit that comes under 1 lakh, so though there won't be any tax on it. Suppose your returns are more than 1 lakh, there will be this 10%. So as I mentioned before, this 10% tax will be levied on the same. Okay, and this is only for equity mutual funds. So when I come to debt mutual funds, okay, so for debt mutual funds, so as I explained in the last class, in debt mutual funds you invest in debt instruments like government bonds, commercial papers, debentures and stuff. So the taxation, how it works here is, the profits get added to your income tax slab. I mean, I'll be touching upon income tax slab in when I'll be going deep, when I deep dive into fundamental analysis. I mean, you guys are pretty sure, like, you know, when you're in that first level, you have to pay this much amount. If your income is more than 5 lakhs, you have to pay this much amount of tax. You have different levels, right? So when you invest in a debt mutual funds, this profit gets added to your income, like, you know, when income tax statements, okay, statements. And according to your IT slab, you know, according to your IT slab, based on your income per month, so you get a level assigned, and that level tells you how much income tax you'll be paying to the government. So according to IT or income tax slab, you pay your taxes. This is how it works for debt mutual funds. Pay taxes. So recapping everything, equity mutual funds, when you sell within a year, it's called short-term capital gain tax. So the tax is 15% of your investment. So I gave an example as well. So rupees 100, suppose rupees 100 was your profit, rupees 15 will be what you'll be paying to the government. Long-term capital gain tax is 10%, and you know, like, the important point here is if your profits after long term, like after 12 months when you sell your stock, and if the profits are under 1 lakh, they are tax free. For debt mutual funds, the profits get added to your income tax, you know, statements, and you'll pay tax according to your income tax slab. So that's how you do it. Okay, fine. So the next topic which we'll be covering is how to select your mutual funds. Okay, I think this is very important. This is where, like, you know, all those things start. Obviously, I mean, this is not something numericals. You should know the company of that mutual fund, right? If I tell you that, you know, Harshad Mehta's family opened a mutual fund yesterday, obviously you're not, like, you know, it's not like you're gonna invest in it directly without knowing the fundamentals, because you know the family's history. So obviously the first and foremost thing you need to know is knowing the company of that mutual fund. So by company I mean like the asset under management as well as the company. So I told you SBI State Bank of India, they, like, you know, they have a lot of mutual funds which run in the market. Okay, so obviously the company you should be researching, or at least having a small idea about, is SBI. So that's what this line means. And obviously historical performance. This is pretty much similar to stocks itself. So you'll have those charts, right? So right from the time the mutual fund was introduced until the current second, it'll show you the performance. So that the prices which are charted are nothing but the NAV. So that is the net asset value, which I'll be coming, you know, in a few minutes. So we have something called NAV, net asset value. I'll be explaining. I will dissect each and every term for you guys. You don't have to worry about it. Okay, and the fourth thing is expense ratio. Expense ratio. I'll be touching upon this as well. So you guys have to remember this. So I'll just show you an example so that you guys, like, you know, don't get bored. For example, like, let's go to, so this is a site called moneycontrol.com. Okay, can you guys see the site?
Yeah, we can see it.
Okay, that's fair enough. See, like, say for example, I want to check you can check it. It's pretty similar to stocks, how the way you check it. SBI. So here you go to moneycontrol.com. You can see, as you can see on the left, you have something called codes, mutual funds, commodities, right? So what you do is you press mutual funds like this. Okay, so when you press mutual funds, it's going to show up the different types of mutual funds which exist for this company. Okay. So say for example, I go, so you have all these so these are the different types of mutual funds which SBI has. Say for example, I go to for example, let's go to small cap. I will go to small cap, and so this is one mutual fund which is there present by which is a part of SBI. Can anyone just explain, what do you think What do you think this SBI Small Cap Fund does? Can anyone explain? What do you think they invest in?
They invest in companies that are above, like, which have a ranking greater than 250 on
Yeah,
the
yes.
index.
Yes, that's great. Or they are also known as small cap companies. That's great. Thank you very much. Okay, okay. So as you can see here, so this is the name of the mutual fund. A regular plan is something I'll explain later.
Small.
Hello? Did anyone? Hello?
Hello.
Yeah, tell.
Yeah, like for, SBI Small Cap Fund invests in small cap companies comparatively. Like for example, Tata Steel is a large cap steel company,
Yeah,
and JSW is comparatively small.
yeah.
So
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 it's
it's
predominantly in small cap companies. So it's predominantly.
yeah, yeah,
So
yeah,
again,
yeah.
I will be. So there is a tool, like say for example, you want to compare two companies, two mutual funds. Hmm? Are you with me?
Yeah.
Yeah, so I will show you as to how you can compare two mutual funds and see which companies are common with them, so that you get a better gauge as to which type of companies and what's the weightage of that particular company they invest. I will be going through this as well. But this mutual fund in particular, as it's self-explanatory, they invest only in small cap companies in SBI, and usually these types of mutual funds are invested by people who can appetite a certain risk. So I think you'll agree with me on this point, correct, right? Because small cap companies is
Yeah.
something which don't have extreme, like they are upcoming companies with not so much stable, what do you say, fundamentals. But if those small cap companies do well, your returns are gonna skyrocket. But yeah, there's a risk involved in that. You can see down. Can you see this thing called riskometer? Guys, can you see this thing called riskometer here on the screen?
Yeah.
So you can see that moderately high, right? So that's what this thing is. So you will have to appetite a certain amount of risk, which when you invest in a small cap mutual fund companies. And to answer your question, it's given right here. See, small cap fund. This fund has 96.65% investments in Indian stocks, of which only that see 73.96 is small cap and 9.07 is mid cap stocks, and the rest will be answer blue chip. So this is like SBI small cap fund. As you can see here on your left, you can see something called NAV. NAV is nothing but the net asset value. It's kind of similar to when you type Infosys stock, that stock price value will be there, right? So that's nothing but NAV. That's the net asset value. How it's calculated and stuff, I will just give me 5 minutes, I'll explain it. So as you can see, this rupees 95.4372, it's the NAV. Fund size is similar to market capitalization. So market capitalization is nothing but the value of a company. So the value of a company is in its stock. Okay. So the formula for market capital, for example, market capitalization of Apple, how it's calculated is current stock price into the number of shares it has in total. So for example, Apple, let's take a very famous company. Apple has like a market capitalization, if I'm not wrong, around $2.5 trillion. So that is so if you want to find the number of shares for that company, all you should do is you have to divide 2.5 trillion divide by the current stock price to see the number of shares it has currently in its at its disposal. So that's what market capitalization means. Similarly, fund size means the same. Like for example, a mutual fund means what? A lot of people, a lot of investors pool in their money, and that value is called that the value with the money which they have is nothing but the fund size. So better, more the fund size, the better that mutual fund is, because people have trust in that mutual fund, which is why they're investing in that company. Okay, so that's what fund size means. And you can see like a pointed down as well. In this fund size, close to 47% is investment in category. Okay, category means small. So say here you're talking about small cap, right? So the categories will be like blue chip, small cap, and mid cap. Expense ratio is 1.93%. I will take expense ratio for now. Just remember that expense ratio is like, some, for example, obviously they're not going to do social service, right? When they are making you some amount of profit, they're going to take some amount of money as well. Okay, so expense ratio is nothing but the amount of money that mutual fund or that asset under management company takes out of your investment. So if I have to explain in numbers, say for example you invest 100 rupees in this mutual fund, in this small cap fund, 1.93 is the expense ratio, means 1.93 rupees is what they take. The rest of the money, that is 100 minus 1.93, is what money will be invested by them in the market. That's what expense ratio means. And it's a very, very, very important factor when you're checking for mutual funds. Expense ratio is a very important factor. I'm going to be showing you an Excel sheet or an Excel calculation as well to show you like how much it's important. You'll have at the end of your maturity period or the end of your period, you'll have a difference of almost 7 to 8 lakhs. That depends on how much. So for example, if 25 years 1 lakh is your, so 1 lakh is your investment for 25 years, you'll almost see like at the end of that 25-year period, without expense ratio and with expense ratio, there'll be like a huge difference. So expense ratio is a very, very important thing when you're investing in a particular mutual funds. And down you can see all those things like they show what this small cap fund does. So 70 is almost 74% in small cap, 9.07 in mid cap, and the rest in blue chip or whatever debt instruments they invest in. And they have told what is suitable as well. So it's mostly suitable for investors who are looking to invest money for at least 3 to 4 years, because obviously when you're investing when you're investing in a vehicle, which is like when you're investing in a vehicle for 3 to 4 years, you know that you're able to appetite some risk or the other, because small cap companies means what, they're upcoming companies, so their fundamentals can go awry at any point of time. Okay, so this mutual fund is usually held by people who can invest their money for 3 to 4 years. I'll be explaining as to how they invest as well. So there are two types, SIP and lump sum. I'll be covering that as well in the subsequent session or today itself if time permits. And at the same time, these investors should be ready for possibility of higher losses in their investments. Exactly what I said before. So when you're investing in a small cap mutual funds, you be ready to appetite some amount of risk, because if you're obviously, when the risk and reward go hand in hand. When you are able to appetite a risk, your reward is also high. So that's what this mutual fund does. And yeah, so as I was explaining one of the things before, so this is the historical performance of the mutual funds. So as you can see, this is the scheme. So this blue one is this mutual fund scheme, and this is the S&P BSE small cap TRI. So this benchmark is something I will be taking in the subsequent session. Today if I teach it, it's going to confuse you guys a lot. So for now, let's just keep your eyes on this blue color line, which you can see. Can you guys see the blue color line here? This thing. Hello. Yeah. So this is like this how you look at stocks, and you can get to know. So for example, what do you think the trend of this mutual fund is? Can anyone explain? We taught you trends, right? What do you think the trend is? Common trend. And this is 1 year, by the way. Yes, upper trend, bullish trend. Excellent. So this is what it does. Returns and all, I will when I teach SIP and lump sum, I think that will be more appropriate when I teach the same. So this is how you can go on moneycontrol.com and check. There are a lot of things as well. See, if you don't want small cap, I mean, usually when you're beginning to invest, you want like some amount of return, and you want to invest in companies which are safe. Okay, so let's go to some blue chip fund. Sorry guys. For example, let's go to this thing, Axis Blue Chip Fund. This is, they invest in blue chip companies. So this is for people like, who can't appetite much risk. Blue chip companies are large cap companies. They have very good fundamentals. They are very famous in India, top 50 in India. Rest assured that, you'll get some amount of return or something, unless that company goes like totally bankrupt, which is not the case every time. So this is another example of a mutual fund also, Axis Blue Chip Fund Growth. So growth fund is one type of mutual funds where they leverage the growth of a particular industry or a particular stock, and that mutual fund invests whatever money you have invested into that particular company. So growth, those are the meaning of growth fund. So they leverage, so they see which sectors, say pharmacy or healthcare, whatever, sorry, pharmacy, automobiles, whatever industry is booming at that particular time, they'll invest your money in that so that your returns are as maximized as possible. So if you guys are getting so we'll go to direct. Okay, so as you can see, again, the net asset value, I'll teach net asset value. It's 42.43. Fund size is like how much money has been, like how much money, so the amount invested by investors in that particular company is, as of now, it stands at this number. Expense ratio is like the cuts which that particular asset under management company or that mutual fund takes from your investment. Okay, so as you can see, large cap mutual funds, this fund has 94.76 investment in Indian stocks, of which 82.36 is large cap and 1.8 is mid caps. The rest can be based on that mutual fund. They'll see, like whether the debt instruments are better or the small caps are better. That's at the discretion of the companies. So I will be I'll be teaching a tool where you can see the layout between two similar mutual funds and see, like what is the overlap between. So overlap between stocks means, suppose there are two so Axis has a blue chip fund, means obviously there'll be another, like Aditya Birla might have a same, they might have the same blue chip company stock. So if you're buying units, say you buy one unit of Axis Bank blue chip mutual fund, and you buy one unit of say Aditya Birla blue chip mutual fund, there has to be some overlap, because ultimately both of them are investing in the stock market. So you should know the overlap of the stock. You see which stocks are common in both the mutual funds, what is not common in both those mutual funds, what is the weightage of that particular company in that mutual fund. I'll be teaching that tool as well. And here it's so continuing. So suitable, so this type of mutual fund is suitable for investors who are looking to invest their money same for 3 to 4 years and looking for higher returns. So that's what this means. As you can see, this is the historical performance as well. So Axis blue chip, you can see the growth. See, if your return, since you're able to appetite some risk, this is the returns you'll get. Sorry, this is not the return, this is the growth. Apologies, this is the growth. So this is the growth from a particular, so it's a point to point time growth. So when you take 1 point, exactly after another year is another point. So between those 2 points, that's what this growth shows. So the historical performance of this mutual fund is very good, as you can see, past 1 year. And you should keep in mind it's the COVID pandemic as well. So obviously there's not been any major dip from August. It's been there was some dip around February time. Then that was pretty much it. It's shown an upward trend. So that's what this mutual fund. This is how you analyze a mutual fund in its basics, like in the initial stages. Obviously, as I go deeper, I'm gonna explain as to how you can how you can research about a mutual fund, how you can read the other things as well. So when I teach you SIP and lump sum and all, that time you're gonna understand the other factors which are written here as well. I hope that's clear, guys. And this benchmark also, I'll be teaching something. Now I don't want you guys to get confused, so I'll be teaching in some time, as as these sessions progress by. Okay, as of now, any returns, guys? Sorry, any doubts? Hello?
No.
Okay, I hope everything is
Excuse
clear.
me.
Yeah, please tell me.
Can you give a bit more details about NAV?
Yes, NAV is the next topic I'm taking.
Okay, thank you.
Yeah, that's fine.
Bro, excuse me.
Yeah, please tell me.
Is it possible mutual funds can manipulate stock market?
No, they are regulated. They will have to be regulated, because at the end of the day, they are under SEBI, right? Because you are investing in stocks. Correct, right?
Like
And yeah, so then
retailers give money to mutual funds, okay, right?
yes, yes,
Uh,
yes, yeah.
so if I've heard in some interview,
Hmm.
there was Rakesh Jhunjhunwala, and he was like there was allegation that he and along with some mutual funds
Yes,
manipulate stock market.
yes,
So that's
yes.
why.
I mean,
So is it possible?
yes, they do it. They do it. I'm not gonna deny that. But those cases are very rare. I mean, if you seek a crime, you're obviously gonna commit a crime, right? Will you accept my point? Like I do understand,
Yeah.
which is why, like I do understand. For example, when you have a lot of investors pooling in money, that much, you know, you have a lot of liquid. You have so much money when you invest in the market. Obviously, the amount of liquidity poured that's called stock market manipulation. I hope you agree. That's what you think is stock market manipulation, right?
Yeah. Yeah.
Yeah. So to prevent, you know, since they know that they have like high capital, they have like lot of money in their hand, what they do is, for example, when you're buying the shares of a company, you're basically a part of the company,
Yes.
and to prevent, you know, these illicit practices, and you know that when you buy shares in a company, it's basically ownership in a company. Will you agree to this point?
Yeah.
And so to prevent, like, you know, to prevent manipulation of stock prices basically means, you know, you are in control of that company. Will you agree to my point?
Yeah.
Okay. So for example, you know Harshad Mehta, you know, he you know, artificially rigged that cement stock prices. He took it from
Yeah. ACC.
ACC. So he took it to
300 to
9,000.
9,000.
So how he does that, when you buy a lot of shares of the company, you become a part of that company, right? And also one thing you guys should know is, like, when you have more than 50% of that company, it's basically yours. Will you agree to my point?
Yeah. Yeah.
Yeah.
Yeah. Yeah.
So when
You
you,
own the
yes,
company.
so if any individual or any organization has more than 50% of the company, they have the rights to control that company, and they can influence its decisions. So to prevent that, you know, that manipulation of that stock or manipulation of the company, what mutual funds do is they will never have more than 50% you know, share in that particular company. They have to make sure, and it's a guideline for every mutual fund, to not have more than 50% weightage in that company. That means they should not buy so many stocks of the company such that they have 50% of the company under their belt. So when you don't have, so obviously when you don't have more than 50%, you can't, you can't influence the company as much as, you know, obviously Rakesh Junjunwala and co, they must have done, you know, they must have bought these stocks in huge amount, and, you know, they might have rigged it. So those crimes are something which, you know, occur regularly. But as things stand, mutual fund houses make sure that they don't have 50% more than 50% of their, you know, shares or their stocks or their share of stocks in that company, so as to not influence, you know, and disturb the momentum of the market as well, and not put the retail investors at risk. I hope that clarifies your doubt.
Yeah. Thanks.
Yeah. Thank you. Okay, so can I carry on? I'll be teaching net asset value as well. Can I carry on, guys? Hello.
Yeah.
Yes.
Okay, so everyone's most requested topic, net asset value. So if I have to give a definition for this, it's nothing but value per unit of mutual fund, or ULIPs. ULIPs is something I taught last time. So for now, just, like, you know, don't remember ULIPs, remember mutual fund. So when I went to Money Control and showed you guys those website, right, on the left there was a price. Think of net asset value as nothing but like the stock price of a company, guys. You know, it's analogous to like, you know, stock price of a company. It's the same value. So whatever value, so, you know, better the net asset value, you know, like, you know, that I'm not, obviously not better the value, better the mutual fund. That's, you know, that's such a bogus statement. It's analogous to a company. So if your stocks are performing well, your stock price also will be high, because the demand for it will be very high as well. So when demand is there, supply will be less. You know? Let's not get into the economics. Just remember, net asset value is value per unit of the mutual funds. It's similar to stock prices. So when I tell the stock price of Infosys is like ₹1, so you can you assume net asset value of a mutual fund when it's ₹1. Think of it as a stock price of that particular company as well. Okay, and the same logic entails here as well. So how retail investors buy and sell stocks at that share price, right? So investors, like, you know, like us or the mutual funds, you buy slash sell at NAV price. NAV is nothing but net asset value price. Okay, so to make the, you know, to make things clear, like, I'll just take an example. Okay, for example, so this is the mutual fund house, guys. Okay, suppose a lot of investors came in, so a lot of investors came in and pooled their money, okay. And after pooling the money, say they have rupees 1 crore, I mean very very small amount, there'll be more, there'll be like 50 crores for like, just to make things easier, just suppose when they pool in, when the investors gave all the money and they pooled in, it was 1 lakh rupees. Obviously they're not gonna like give the entire 1 crore, right? They do need to keep some amount as like, you know, like say for example, if there's something a lock-in period where you stay within that, you have to stay in that mutual fund for that particular amount of time and you can't exit back. And in case, you know, if the client wants to get like, uh, sell those mutual fund units, they have to, like, you know, the company has to give back that money, they have to give back us those, that particular return, right? So that particular return is given from, you know, they set aside a small amount from this 1 crore for those types of those types of customers who sell their units before the lock-in period. I'll be exploring this in detail in the subsequent session. So obviously they won't sell, or they won't give. So let's, you know, coin a better phrase. They won't give all the 1 crore units or those 1 crore shares, okay. So they will only give out a particular amount of units for public, and the rest will be stored as cash, like, you know, in case they need some amount of liquid cash in their hands, so that in case any emergency comes across, they can pay for it as well, okay. So that's one thing I want to tell you guys. So like all the 1 crore is not invested in the market. Some will be kept by the mutual fund house to take care of other expenses or for emergency purposes and stuff, okay. Say for example, there's a mutual fund XYZ, okay. Suppose you want to invest rupees 100 in this company, and say the net asset value, just think of net asset value of stock price, so that you don't have any confusion, okay. Suppose the price of that mutual fund is rupees 5. Can anyone just, like, you know, tell me how many units are you gonna buy? 5 rupees, not rupees, not 50. So you want to invest rupees 5, the net asset value is 5 rupees. How many units of that mutual fund are you buying? Just go back to the stock market lecture which we gave. Suppose you want to invest 100 rupees, the stock price is 5 rupees. How many shares of that stock are you buying? Use that logic here.
20.
And yes, exactly. Use the same logic, like, you know, you have total investment which is 100. मेरे पास like so I have मेरे पास 100 rupees invest करने का पैसा है. The stock price is 5, so you're buying 20 shares of that company. Use the same, 20 units. So here the appropriate term is units of that company. You're buying 20 units of that company. Same logic you apply here. So you have 100 rupees. The net asset value of that mutual fund is 5 rupees, and, you know, obviously the number of units I have to be buying is, you know, your total investment divided by NAV, which is 20 units of that company you have, okay. So now we'll be like deep diving. Let's deep dive. So how to calculate NAV? Can anyone who's done a little bit of accounting, can you tell the formula for this? Anyone? What do you think the formula of NAV? How do you think the obviously like, you know, just knowing what NAV is not enough. You should know how the NAV of a particular mutual fund is calculated, because it, unlike stock price, it's not like, you know, dependent on how the company's operations are performing. It's dependent on how much money it has and how it's managing its investment. So does anyone have an idea of how NAV works? What's the formula?
I think like in the name itself it says NAV and N stands for net.
Yes.
So assuming if I go by that logic, then I think there would be subtraction involved, like you subtract
Yes.
something from a bigger
Excellent.
amount.
Excellent.
We can
Excellent.
say asset minus liabilities.
Yes, that's excellent. Yes, asset minus liabilities. That's great. So yeah, that's the numerator. So if I have to write the formula, it's nothing but assets minus liabilities divided by total number of units. I'm hearing the same voices continuously. Is everyone asleep or what? Can I get a heads up, please? Are you guys there in this lecture?
Yeah. Yes.
Yeah.
Okay.
Yeah.
Okay, that's great to hear.
Yes.
Okay, so assets minus liabilities divided by total number of units. This is how the NAV is calculated. So let's deep dive, okay. Say for example you have an equity mutual fund, and say you have this mutual fund A, okay. Say they invest in, so they have their assets, sorry, apologies, suppose they have their assets in the following form. Assets is nothing but anything which you have and which can give you some amount of money in your hand is nothing but an asset. So when you sell your phone on OLX and you get that money, so your phone is technically an asset. Just a very boiled down example of what an asset is. It goes beyond that. Basically just remember assets which are something which which can give you the money. It does not have to necessarily be like immediate money. It's not dependent on liquidity. It's something which you can sell and get some money for, okay. Say this so imagine this mutual fund. I gave this example, right, XYZ. So imagine XYZ has assets in the form of stocks plus bonds. So basically a mutual fund's assets are nothing but the fund's value, like whatever money the investors have pulled in will be its assets technically, okay, cash, okay. Say for example they have, I don't know, 50 crores. Let's take like a big number for one's example. 50 crores is their value, you think, okay. So this is the amount of money which they have pooled in and stuff. So 50 crores, you imagine. Say they invest in only 2 stocks, let's just make it simple without bringing in averages, weighted average of that particular company's, how much they invest in a particular company. We'll just take 2 stocks. Imagine they have invested, and that mutual fund house feels that TCS and HDFC. So just take 2 stocks example, TCS, HDFC. They feel that these 2 companies are performing well. Investors के investment इधर डाल दे, they tell, okay. So imagine here they have rupees 25 crores invested, and here they have rupees 20 crores invested. Bonds, for now let's not take bonds because we are talking about equity mutual funds, but mostly when you go for mutual funds you will go for a hybrid to make sure you want the best of both the worlds. That's risk and reward. And as I told before, they're not going to invest the entire, obviously they're not going to invest the entire thing into the equity market or into debt instruments. They have to keep some cash for themselves to, like, suppose they want to bail out or something, they need to have cash ready made, okay. So can anyone tell me what do you think this cash, I mean it's easy, you have 50 crores, 25 invested here, 20 invested here, how much cash will they have in hand? 50, 25,
5 crores.
yes, that's great. So they have this much cash in hand, suppose you imagine. So this is the amount of assets that they have, okay. Liabilities are nothing but, okay, what is meaning of liable? Can anyone tell? He's he's a, when when there's when a parent doesn't like a child, he'll be like, he's a liability to me, they say, right? I know it's very bad, but what do they mean by he's a liability to me? Can anyone explain what liability is?
According to what I
Non-performing
read,
assets.
read in
Yeah, please tell me anything.
yeah,
Anyone can answer also, guys.
Non-performing
like
assets or
Yes,
depreciating assets.
yes, that's great. I mean, let's that is with respect to a company's financials. Any other, can you just like improve on that? Just tell a basic
uh,
definition of liability. It's
li-
something,
uh,
which you
like
have to pay
according to
for,
which I like
correct?
I
Something which you owe is a
hello,
liability, yes or no? Correct?
yeah, something which I own and
Which I
like it's not an
owe,
asset.
OWE, something which I have to give back to someone. A loan is a liability, correct?
Yeah, yeah.
Yeah, it's okay. Your definition also fine. I'm not telling whatever you told now. Yes, depreciating asset is also a liability, but that's with respect to a company. Like I want to. So here in this case, liability is something which a company must pay, or a company owes to something so that they can keep the day-to-day operations going on. So these liabilities in a mutual fund house can be of different types. So one of them will be management fee, which they have to pay to, like the management of that particular company. It usually ranges, it's usually 2% per year. So in 365 days they just pay like 2% and stuff, okay. So for example, when I calculated this 2% divided by 365 of that 50 crores which is present here, okay, it comes around to rupees 27 4,000 rupees, okay. I did the calculation beforehand, guys, so you don't have to worry about it. Just imagine, like, so this is something you don't have to worry about, because you're just going to see the net asset value here. Since someone asked for a deep dive into NAV, I'm dissecting the formula itself for you. Management fee is nothing but the percentage of the fee which is paid to the management to run the day-to-day operational stuff. Okay, and this amount is like very insignificant with respect to where is 50 crores, where is 27,000 rupees, but still you got to pay it. Redemption is nothing but as I told before, so if an investor is selling his units before a particular period, so like that mutual fund house units recommends a lock-in period of 3 years, but before 3 years they sell it off. Means whatever return is there, they have to they didn't expect that particular client is gonna sell his mutual fund units within 3 years, so they have to owe him that amount of returns, if any, to that person, right? So that is given from this cash which is saved for those type of clients. So that is redemption. The other things are miscellaneous, like insurance claims and stuff, so you don't have to go too deep into that. For now, just remember this. So for example, you have 50 crore in assets, you have 27,400 crores in liabilities. Say the number of units, so total units, say the number of units they issue is like 2 crores. They said they issued 2 crore units. Okay, so recapping, XYZ mutual fund, they have assets worth 50 crores. So when you combine all their liabilities, obviously I just took a scenario, this is just to explain the math behind it. It's like my own case, I didn't research a company and do it, but the math, I just want to get across the mathematical calculation it's done, and say the number of units they issue to the public is like 2 crore units or something. Okay, so NAV, so the NAV will be calculated by 50 crores. So I mean 50 crores, if I have to write, means like this, so that because I have the 27,000 as well, right? 50 crores minus 27,400 divided by 2 crores. This is very insignificant, so I don't even have to subtract from this. This is essentially by calculating it's like calculating rupees 50 crore by rupees 2 crore, sorry, 2 crore. A crore cancels, so your net asset value of that particular mutual fund is rupees 25. And obviously, if you want to go deep dive, so when you have a numerator, when you have a denominator, you guys you guys obviously did fractions. When the numerator increases, what happens to that quantity?
Increases.
It increases.
What is the numerator in this case? Assets minus liabilities.
50 crores.
Liabilities.
Okay, so you want to increase your numerator, which is assets minus liabilities, and so when you increase your numerator, the total value increases, and when you want your total value to increase, your numerator has to increase. When your numerator has to increase, which quantity has to be increased so that your net asset value also increases?
Assets have to increase.
Exactly. So as I told before, the more assets or the more money pooled in, that signifies the asset, the strength of that particular mutual fund. Okay. So this was just like a deep dive into the math. So this is how net asset value for a particular company is calculated on a very basic level, because you guys don't have to know this. When you're when you're buying mutual fund units, you just look at you look at how that mutual fund returns are, you look at the NAV, you buy units. You're not gonna be like, okay, itna assets hai, itna liabilities hai, they're giving 2 crore units and stuff. This one is just to make sure that you guys know how that NAV is calculated. You should know how, because when the company has good assets, you know that the NAV is valued properly as well. Say for example, so let's talk about return here. Okay, return on that mutual, a return after 1 year. Say after 1 year, I sold everyone sell, just imagine all of them sold their units. Okay, so here are the assets. Let's take assets. Okay, so how much was the value before? TCS. So for example, this XYZ mutual fund invests in TCS and HDFC. Okay, so this TCS became, so what was 25 became 35 crores in TCS. That is, when assuming that everyone sells, obviously no one will do it in the real world, just assume that. And this HDFC, and it's remained at, so from 20 it became 25. And imagine like no one, we have sold their units before the lock-in period and stuff. Just imagine, for simplicity's sake, they have rupees 5 crores in cash, the mutual fund. So what is the value here? Rupees 65 crores. Correct, right? So from 50 it went to rupees 65 crores. Correct? Correct, guys? Hello?
Can you please explain this again?
Okay, fine. See, did you understand this part? May I know your name, please?
Pranjal.
Okay, Pranjal,
Yeah.
did you understand this rupees
Yeah,
20?
I understood this. I just wanted to understand return part again.
Return, okay, yeah. So say for example, I'm just telling, say for example, just to make things easier, after 1 year you want to calculate, the mutual fund wants to calculate this like normal, this proper returns, okay? And I did explain before that this particular mutual funds has their money cashed in only on these three things. They have 5 crore cash, they have rupees 25 crores invested in TCS stock, and they have rupees 20 crores invested in HDFC. Okay, suppose everyone else, suppose that TCS, suppose that this value, suppose TCS is performing very very well. Okay, at the end of 1 year, that rupees 25 became rupees 35. Will you agree on me? So when a company performs nice, its valuation becomes better.
Yeah.
Correct. So
Yeah.
suppose from obviously you're gonna, when you're going long on the market, when you buy at 5, you're gonna sell it only at a price which is higher than 5. Correct, right? Will you agree
Right.
to this point? So same logic you apply here. Suppose the 25 crores which they invest in TCS is now at the end of 1 year, the total value of their investment is rupees 35 crores. So that's good for the investors of the mutual fund, right? Because they have obviously, when 25 crores has become 35 crores, there's a profit of rupees 10 crore. Correct,
Yes.
right?
Yes.
Which they will distribute it among their retail investor, or they'll distribute it to the to the investors who have invested in that particular mutual fund. Correct?
Yeah, right.
I hope that's clear now.
Yeah, it is.
Okay, so rupees 35, and imagine HDFC, when you bought, when they invested, when that mutual fund invested, they bought it like they invested rupees 20 crores. At the end of 1 year, that value was rupees 25 crores. So here there's a plus 5 profit in HDFC stocks which they have invested totally. Will you agree to my point, Pranjal?
Yes.
Okay, and just to make things simple, rupees 5 crores is the same, that's the cash reserve they have.
Okay.
Okay, so rupees 65 crores is their value now. Will you accept this? Will you?
Yeah.
Okay.
Okay, got it.
Okay, rupees 65 crores. So here you can calculate NAV. Is it possible, guys? Either 50 crores tha. In January 2020 it was 50 crores. January 2021 it's 65 crores. Here NAV was 25 to rupees 25, assuming 2 crore units are given to the public. Here you have your assets. Imagine your liabilities are 27,400 rupees only after 1 year. Is it possible for me to calculate NAV here, guys? If yes,
Yeah, we can.
Yes.
how?
Yes,
Can anyone tell me?
65 by
Exactly, excellent. Rupees 65 crores by 2 crores. This thing, it will be 32.5. Correct, right?
Yeah.
Okay. So this is the NAV at the end of 1 year. How many units did you buy here? Or how much did you invest? Here, say for example, you invested 100 rupees in this mutual fund, okay? In this particular mutual fund. So when you boil it down to proper value, so essentially you have invested 32.5, which is the net asset value, into what? 100? Correct, right? 100 is the value you have invested. So 3250. And you can obviously calculate the return. So your initial investment will be there, your final investment will be there. You can calculate your return. Correct, no, guys?
Yeah. Very good.
Yeah. So for now, just remember, so you have your NAV at rupees 25, which was present when the total assets they had was 50 crores. At the end of 1 year, so their calculation that TCS and HDFC is doing very very well has paid off. So their total investment in TCS, which was rupees 25 a year back, is 35, and their HDFC, which was 20 crores before, has become 25 crores now, and the total value of their mutual fund now is 65 crores. Okay, and now their net so their profit, so their mutual fund has increased from 50 to 65, so the net is 15 crores, which will be like, depending on what the company's wishes are, they will decide like, how much of the 15 crores should be given, like based on how many units that customer has purchased. Depending on that, the profits will be given. There'll be dividends and all as same. Let's not get into dividends and stuff. So for now, just assume that if the mutual fund is performing very well, its NAV will rise. So that is like the fund's value will increase, and the appropriate returns will be given to the investors as well. Is it clear till now? This is similar to how stocks work, guys. For example, when a stock is rupees 5, okay, so it's gonna increase. Suppose the stock increases to rupees 10. How is it like, when you have good fundamentals and stuff, only it does, right? What is fundamental for a mutual fund house? How well it invests its money is what will determine how strong it is. Am I right, guys? A response, please.
Yeah.
That's how a mutual fund house works, right? How well they invest their money for their investors, the value of that mutual fund, and if they are successful in increasing their so as I showed here, from 30, they from 20 they took it to 35 and stuff. That shows their investments are good. Their investments for their investors have paid off, and subsequently their NAV is good as well. So from rupees 25, it's become rupees 32.5. So that shows the what was 25, it became 32.5, signifies how well that mutual fund house is performing. Is it clear now, guys?
Yes, it is.
If you have doubts, you can ask me. Just remember it as their investments have paid off. At the end of 1 year, their total holdings or their total investment in TCS has increased, in HDFC has increased, due to which the assets which they have in their hand, it's not yet distributed to their retail investors. Just assume it's there in their hand, and obviously you have the assets which they have, which is rupees 65 year. They imagine that the total number of units they have is still 2 crores only. Their net asset value, at the end of 1 year, it will be 32.5, which shows that more and more people have bought units of this company, and this particular mutual fund has invested in whatever they have invested, in our case TCS and HDFC, and they have shown that their their reading of the stocks has been good, due to which it's been fruitful, and they're able to give the profit to their investors. This is how net asset value as a concept works. It's similar. See, all this background detail is something which you guys obviously when you're trading, when you guys are investing in mutual funds, all these you don't have to go through. They're not this much detail is not required. You go into the app, you'll be like, okay, net asset value is this much. You'll look into okay, if I invest this much money every month, if I give this premium, this is the returns I'm getting at the end of the month and stuff. So that is SIP and lump sum, which I'll be covering in the next class. Okay. And you're gonna buy those units, then after some time, whenever you want to sell it, you can sell those units. It's pretty much similar to stock. Again, you have to remember the difference. The only difference between a mutual fund and a stock market investment is, in mutual funds, all your investment is diversified, based on your goals. In stock market, you if you're investing in Infosys, you only invest in Infosys. But mutual fund is not like that. Say you want to invest in a tech mutual fund. You want you are seeing a boom in tech industry. When you invest in a tech mutual funds, you'll see so when you're buying those units, right, when you go onto the app, you can see also 26% is in Infosys, 23% is in TCS. You can see those. If they are, suppose that mutual fund invest only in tech companies, and obviously when the assets at hand are very nice, assuming there's no change in denominator, which is the number of units, or the liabilities, and liabilities is never gonna come to crore unless that mutual fund is performing very badly and stuff. The mutual fund, the net asset value for that mutual fund increases. So as in the case here, rupees 25, which was there a year back, it's become rupees 32.5 as a virtue of their investments being good. So as they've seen an appreciation in their investments in HDFC, in this case HDFC and TCS. So did you guys understand till here? May I know who asked like how a NAV works? I hope that's, and not particularly, this question is not particularly to him. So I hope is everything understood, guys? You guys understood how net asset value works, right? I need a response,
Yeah, I
please.
got.
Yes,
I
yes.
got.
Yes. Is the lecture boring, guys? I'm just like, you know.
No.
No, please be free. No problem.
No, it's not.
See,
No, it's not. It's not.
I see.
But it will be more better if we like do live interactions,
Yeah, live
like offline.
offline. Yeah, that's. I mean, can you blame me for that?
No one is to blame.
Yeah. So even I prefer offline interaction, but you know that's how things are right now. Offline mein to I can like, you know, show you. I can come to each one of you and like, you know, clarify doubts. But as things stand, any doubts? Yeah, is the lecture boring? Anyone? I would like to know everyone's views, please. You know, I think, you know, I'll.
Okay, I have one
I have.
question.
Yeah, please.
Okay, so my question is the percentage fixed for the amount of cash a particular mutual fund is going to have?
Uh,
I mean, is that fixed? Like in banking sector, we know that there's a particular amount of money they are always going to keep as that liquid. But is it
It's
fixed for mutual funds also?
it differs from mutual funds to mutual funds. I don't know the exact statistics because, you know, like I just
So
I
it
just
depends upon the
exactly.
fund managers, I
Yeah, it
guess.
depends on the fund managers. Like say for example, they invest. Like, suppose it's a debt mutual fund. Debt mutual funds. What did I tell
Yeah.
you? Like, you know, it's a short term. Short term में पैसा देना पड़ेगा to the investors. Maximum they're gonna wait for is like 5-6 months. Am I right? Correct,
Yeah,
right?
yeah.
So that time they have to keep reserve cash, no, bro. Like they have to return because they won't know, like, you know, this particular investor is staying for 3 years. Suppose that investor wants to leave within a year itself. See, they'll assume like, you know, this investor is staying for 3 years. If they assume like that and don't keep any cash at all, suppose they owe cash, what are they gonna do? They can't do anything, right? So they need to have some amount of cash, right, to pay those investors returns, if any, like, you know, 10 रुपए से it became rupees 15, वो 5 रुपए देना पड़ेगा ना, they have to give that rupees 5, right? So that will be given from, and obviously, bro, you do know that any company always has the risk of becoming, not that much bankrupt. Am I right? Something can happen.
Yeah.
Building, you know, 4 buildings have burnt. They have to pay for it, right? So they might pay a certain amount from the treasury or that cash which they reserve.
Yeah.
Bro, at the end of the day, they are not social service schemes to, like, you know, we are gonna take rupees 50 hum janata ke liye, you know. It's not like that. It's not like that Abraham Lincoln quote, for the people, to the people, by the people and all. They need some cuts, they need money for themselves as well, so that money is stored for their security. I hope that clarifies it out.
Yeah, thank you.
Yeah, you're welcome. Anyone else, guys? What about?
I have doubt about P ratio actually,
Okay.
because there's one stock DMart. Okay,
Okay.
its P ratio is too high, but
Yeah.
still the stock price is rising.
Yeah,
How
so
is it possible?
PE ratio was something I wanted to take in fundamental analysis, but yeah, it's okay, fine, I'll explain it. So PE ratio is like, you know, when it's above a certain, you do know that, right? You know, PE ratio can be overvalued, undervalued,
Yeah,
or
yeah,
optimally
yeah,
valued.
yeah.
Yeah, so PE ratio is one of the factors you have to consider. It is not the only factor you have to consider, because it depends on like how do you calculate PE ratio? Do
It's
you know?
price per earning.
Price to earnings, right? So, and how, like, you know, how does the PE ratio increase according to math?
Like it's we can say it's been overvalued. Like the price, it
Yes.
which
Yeah, correct,
it's
correct,
been
correct.
traded now,
Hmm.
it should be lesser. Should
Yes.
be less compared
Okay.
to what it is now.
PE ratio, okay. I'll tell you a statement. Just tell me. PE ratio is directly proportional to market value per share. Will you agree with me?
Yeah,
Because it's the numerator. So
yeah.
when the market value increases, the PE ratio increases.
Yeah.
Okay. So
Yes, yes.
when the market value increases, the PE ratio increases, and above us, I will be teaching that a particular figure you have to look at where you can decide that that particular stock is overvalued. I will be teaching. It's 20 if I'm not wrong. If my memory serves right, when I did my analysis in my internships, it was 20. So to answer your question as to know how that particular company is that the question, right? You want to see how that PE
Yeah,
ratio
yeah,
is legit or not. You compare
yeah,
it.
yeah.
You compare the PE ratio of that company with similar companies in that particular sector.
Yeah, I know. Like it's overvalued. DMart's P is around 200.
Okay,
It's
then
too overvalued.
yeah, that's your opinion, and I can't give an opinion because the club's policy is not to give an opinion. 200 is overvalued. I will accept that. Do you want to make an investment in DMart? If you feel it's overvalued, will you make an investment?
Yeah,
I am.
according to me, I shouldn't. According to me, I shouldn't. But it is giving a good return
It is
in
giving a
a
good
long
return.
term.
Yes, it is
Yeah,
giving a good
in a
return
long term.
in a long
Like
term.
if I have studied the figures for 3 years. Like from it started in 2017, I guess.
Okay,
So from then till now, it's increasing and increasing, and
increasing.
it's
Okay,
more overvalued than MRF. Like
yeah.
MRF.
Okay. So as I told before, I wholeheartedly agree to your point. The PE ratio is 200, it's overvalued and stuff, okay. But again, that's a decision you have to take because, this is like, at least, if this club is not entirely in my hands, whatever the head says me, I have to do. I can't give you out a recommendation, but one thing I can tell you is PE ratio is one of the financial indicators you have to take. There are a lot of things. You have heard of PB ratio, right? Price to booking ratio
Yeah,
and
yeah,
stuff.
price to.
So financial ratio is something I'll be teaching. You don't have to worry. I'll teach you like 10 financial ratios. You need to analyze all of them and then come to a conclusion because PE ratio is obviously if I know you'll agree with me. PE ratio is the first indicator ratio everyone studies.
Yeah, yeah, yeah.
Is it fair to analyze like uh, is it fair to analyze fundamentally analyze that company just based on PE ratio? Will you agree to my point? No, right?
No, 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 not all.
You have to look you have to look at historical performance, and obviously the other member is taking technical analysis, so that is something you have to do, correct, right? P
Yeah.
ratio is just one part, it's just one part. There are other ratios you have to analyze. You should know how to read the company statements. Like you can look, for example, earnings per share. It depends on the income sheet. Income
Yeah,
sheet means
income.
what? Income sheet means asset.
Revenue of a
Yes,
company.
as assets minus liabilities is like equity and stuff. Okay, so that is what income sheets will show. So that will tell you, like, you can proofread. Okay, the earnings. So for example, when you're reading the income sheet, you find that the earnings are very less, but the EPS on that PE ratio is high. So what analysis can you make from this? That kuch so gadbad hai. There is some.
Obviously.
So you have to go through all factors. Like you should not rely solely on PE ratio. But again, see, I would love to, but I can't give you a recommendation now. If you feel that the stock is overvalued just because of just because it's 200 DMart, am I right? DMart, right?
Yeah, yeah, yeah,
If
yeah.
you feel it's overvalued and still it's performing well, you feel that it's performing well in a long term, I think it's a decision you have to take. Am I right?
Yeah, yeah.
If you're scared that PE ratio is very high, it's very overvalued, there might be a chance it'll tumble, don't invest in it. That's a call you have to take, correct, right?
Okay.
But all I can say is, like, don't go solely by PE ratio. PE ratio is one of the factors you have to consider. There's PB ratio, there are other ratios you have to calculate as well. And yeah, obviously, before you learn PE ratios, you do need to know how to read the statements. I'm not, I won't be teaching you like how an accountant teaches you, just basic reading. You look at the earnings, look at the revenues over 5 years, you see if there's a particular increase and stuff. So we'll be teaching that after, because mutual funds was something which was requested by people, or else by now I'd be teaching you balance sheet, income statements, and cash flow statements as well. I hope that clarifies it out.
Okay.
Yeah. Anyone else, guys? What about you?
Um,
Yeah.
I had a very general kind of doubt.
Yeah.
If there's a company and if I'm investing in its mutual funds and its stocks,
Yeah.
so my shares of the company will be an addition of the stocks and my investment in mutual funds, right?
Can you just like Tell again, please.
So if there is a company
Mhm.
and I am investing in its mutual funds
Okay.
as well as its stocks in the market,
Okay.
then the total share of the company that I have
Okay.
will be an addition of both, right?
Yes. Yes. It will be there. They'll be there.
Okay.
Yeah.
Thank you.
Yeah. Anything else, guys? What about the rest of the day? What is, may I know the name of the guys who spoke with me right now? Can I know your names, please?
My name is Sagar.
Okay, Sagar. The other one?
My name is Aditya.
Okay, yeah. That's excellent. And the one who asked the doubt before, your name is Pranjal, right?
Yeah.
Okay, fine. What about the other guys? Zishan, Ishan, Josna, Vidya? Guys, respond, please.
No
Excuse
doubt
me,
Yeah,
as of now.
So,
I have one question. Just now you said that suppose
mm,
Axis Bank shares I am holding, right?
okay,
And I'm also investing in the blue chip fund.
okay.
So how can be that in addition of both the shares will be in my account? Because mutual fund is completely different way it's handled, and the share market is completely handled in a different way.
Axis Bank is
So
a
how can
private
it be both?
company, right?
Yeah, yeah, it's a private company.
I mean, okay, is SBI a private company?
No, it's a government owned.
So
Yeah, no,
again,
it's partial
yes.
one, I
So
guess.
again, that depends on the mutual fund. So if the mutual fund has shares in, in the stock market, obviously if they want, if again that depends on the mutual fund. So I did tell you that mutual fund is based on the goal for the client. Am I right? It's basically
Yeah, yeah.
like an NGO, correct now?
Yeah.
NGO with a certain amount of
Uh,
capitalism associated with it, correct, right?
yeah.
So that depends on mutual fund, depends from mutual fund to mutual fund. If I am opening a mutual fund, I can decide anything I want. Like, I want to invest the money my investors give to me on like blue chip means. And if my company is private, obviously, can I invest in my company itself? It'll be unfair, right? That means if I invest rupees 29 crores in my.
Basically, it's like rigging the prices
Exactly,
of your own stocks.
exactly, exactly, correct. If it's a public company, it will be regulated by SEBI, right?
Yeah.
So obviously, and if a mutual fund has, if a mutual funds company, like say it's a public company as well, and they have a mutual fund, is SEBI, do you think SEBI is gonna allow them to invest that entire money in their company? It's like artificially rigging their own price, right? So SEBI
Yeah,
will set
exactly.
some rules, like
Yeah.
you have only like 2% of that investment should be in your company, the rest has to be diversified. That's what it depends on fund to fund. उसके लिए I have to read for 195 years, tally the data and tell you.
Hmm.
So
So
that
in stock market, for stock market, we can say that shares are allocated to us, and in mutual funds, units are
units are
allocated to
reserved.
us.
So that unit is dependent on, I hope you understood how a net asset value is
Yeah,
calculated,
yeah,
right?
absolutely.
So
Absolutely.
so
Thank you.
that depends on how much assets it has, how much liabilities it shows. Liabilities will be like, in my example, I assume liabilities are none, like very negligible, 27,000 ke there hai, 25 crores ke there. So I hope
Yeah,
that
I got
clarified.
more.
Yeah, yeah. So
Thank you.
anyone else, guys? Aditya has a doubt, I guess.
No, no, I was just saying thank you.
Okay, okay, fine, fine. Anyone else, guys? Josna, Vidya, anyone else?
No, Vikram.
no
Like
doubts as
I'm
such
in
from
the
my side.
basic level, like understanding everything.
Okay.
So right
Was
now,
today's session too heavy for you, Josna?
personally, I'm learning everything. So a bit heavy, not so much, but
Okay.
I was like, yeah, understanding
Okay,
everything.
fine.
Thank
See,
you.
anytime you have you guys have my number, right? All of you.
Yes, Vikram, we do
Yeah,
have.
yeah. So you can anytime, anytime you have doubts, please, like, you can personally message me, or you can put it on the group as well. I'll be happy to get back to you guys. Okay.
Sure, Vikram. Thank you so
Yeah,
much.
yeah, that's fine. So you guys can leave now. If you guys have any more doubts, you can stay, or else you can leave.
Thank you.
Yeah, you're
Thank
welcome. You're
you.
welcome. You're welcome.
Thank
Thank
you.
you.
Yeah, yeah.
Jayant, I actually had a doubt.
Yeah, please tell me.
Like, actually, I wanted a suggestion.
Okay.
Like,